Welcome to our Malaysian. We're gonna execute retinal scan. Access granted. Your secret agent for this mission, Nur Ainaidah binti Kamarudin and Umi Nur Izzati binti Rosli. Today's missions. Hello Malaysians. Your mission for today is to learning on this topic today with these two secret agents, Ain and Umi, which is operational risk in Islamic financial institutions. Don't forget that you need to have this important thing while complete your mission. First, focus, and second, attention. Keep your mind ready and prepare your paper and pen for making note. Good luck Malaysian. The words is counting for you. Are you ready Malaysian? Let's start. Of operational risk defined by Basel II as risk of loss resulting from inadequate or failing internal process, purpose of system, or external event. Operation risk conclude two elements, which is internal system error and external disaster. Islamic Finance added two extra, which is did not comply with Sharia principles and the failure of Islamic bank means fully their fiduciary obligations. Scope of operational risk. First, Sharia non-compliant risk. Sharia non-compliant is the most important thing that must be followed in order to make sure the fulfillment of halal product guidelines. Second, people risk is the types of operations that result from negligence or from exposing Islamic bank to potential loss. Third, technology risk. Every Islamic bank has to be committed to its ongoing cycles of technology refinements, developments, and testing to meet the demands of sophisticated. Fourth, the fiduciary risk. The fiduciary is closely linked to the functions of Islamic bank. Fifth, legal risk. Legal risk can arise when its illegal act is committed by an Islamic bank or its official. Sixth, reputational risk. This risk can cause loss not only to individual bank but also the banking industry.
Identification of operational risk. Identification of operational risk management is divided into 5 groups such as nature of risk, impact of the risk, degree of expectancy, frequency and severity, hazard event and consequence types. First group is nature of risk. Nature of risk is divided into 2 categories, which is internal fraud and external fraud. Internal fraud is an act of type intent to defraud, and then external fraud is hacker attack on the bank's information. Second group is the impact of the risk. Second group also divided into 2 categories, which is direct risk and indirect risk. Direct risk are all sorts of threats that impact the Islamic bank directly when a threat happens. Indirect risk is when someone error happens in a transaction, then the bank may have to spend some money to cover the loss suffered or to fix the system. Third group is degree of expectancy. Degree of expectancy is also divided into 2 groups, which is expected loss and unexpected loss. Alright, next slide is fourth group. Fourth group is frequency and severity. First, high frequency, low severity of operational risk. This category is easy to recognize and is typically already required to be handled by Islamic bank. High frequency, high severity is risk of major losses and there is a little potential to generate take profit. Next, low frequency, low severity is not relevant with operational risk management. Next, low frequency, high severity is unexpected loss that happen very rarely, but if occur, the damage will suffer. Next group is hazard, event and consequence type. Hazard is condition or character. Event is everything that can cause the occurrence of death. The relationship between hazard, event and consequence is a relationship of causes and effect.
Mission complete. Congratulations, you already have finished the mission. Thank you and see you again.